guys, we're less than 24 hours away from probably the biggest piece of news, well, certainly this week, if not this month, and so far this year, and that's the FOMC and the press conference following it. Around about 23 hours away. Also got a busy day tomorrow with the I'll be back tomorrow to discuss this and the fallout of the FOMC, but we've also got quite a large day from other central banks in Japan on Friday. It's usually around 2 p.m. or 3 p.m. Australian time. So with that in mind, it looks like the markets have pretty much traded sideways, although currencies were weaker as US dollar index continued to strengthen. Stock markets pretty much chopped sideways. And I just wanted to note this, that the following market is they're fully pricing in 75 basis points tomorrow at the FOMC, and then 90% sure of another 75 in July, and still another 88% chance that there's 50 in November after a 75, 88% chance in November. So a bit of a break in October, and that could get nasty. However, they do mention here, these guys, is the Fed rates 100 basis points, and I think that's on the cards. I think that they could potentially do that, or even 150, to shock and awe the market into a try and combat inflation. However, as Tyler Durden or Zero Hedge sarcastically note, that means we're closer to a recession and more imminent rate cuts and more quantitative easing, and so stocks will rally. But that's the way it goes, right? The stocks seem to look past the rate hikes and for a potential rally in the markets. Anyway, so that's sort of overnight news, really. Not much else to focus on other than bonds going to higher highs here, as we can see, stretching higher ahead of tomorrow's meeting. And certainly if there's 100 basis points, that should spike even further. And that's fed into the US dollar strength, right? Which we can see across the board is providing opportunities. As we discussed yesterday, might be want to look at the shorter time frames to try and find an opportunity to sell. There wasn't much of a retracement. There was on the euro, but on the Aussie and the pound, that retracement was quite shallow before the next wave of selling came along. And the yen, as you can see, it really didn't dip. It got just caught in this sideways action before breaking or trying to break out above recent highs over 135. Whereas stocks, pretty much, as you can see, was a bit lower and actually closed below the low of yesterday, but more just choppy, really. Nothing huge. Tried to rally through the overnight session, the US overnight session. And once Europeans opened and the US opened, it faded off, but certainly not at the rate that it had been selling off previously. So I think the market's just waiting, biding its time to see whether or not there's going to be, or what the Fed actually do tomorrow. So I would expect over the next 23 hours a lot more of this action, just going sideways, chopping about in stocks, whereas also would expect the dollar index to maybe have a bit of a sell-off, a bit of a retracement as the market waits time. I certainly wouldn't suggest selling it. Interest rates are going to be going up. Tomorrow, it's just a matter of how far, whether it's 50 basis points, 75 basis points, or 100 basis points. That's the question that remains. So interest rates are definitely going up. It's just about how far, and I don't think we're in buy the rumor, sell the fact. Quite often you'll see the market rally and already priced in, and so when the event happens, it'll sell off. Don't think we're going to see that this time. As I said, I think if anything, the US might shock and awe and put up at 100 basis points, which would see the 10-year bond sort of jump by at least 0.5% up into the sort of low, or the high threes, low fours. So yeah, that's pretty much what we're looking at. Looking further afield, indices, majors, this is what we're targeting for this area here for stocks. Initially, 2008 was a 50% retracement. That's down here, which would be pretty drastic to be back at 2008 sort of scenario. But we're in uncharted territory. 40 years since we've had inflation like this, so it's not unexpected. Yen sort of pulled up. As I said, I think the stock market's pretty much trod water just to as we wait for the US Fed and their announcement. Commodities a little weaker across the board. We've got oil off, Brent, gasoline, natural gas off heavily, copper off, so all the majors, and even gold off. All the major commodities quite a bit weaker. Softs, what do we got? Yeah, also a little bit of selling as the market sort of takes into account interest rates. Wheat, still, that's all-time highs for wheat, so we're still sort of hanging at elevated levels. Yeah, don't see much opportunity. To me, again, it's if you're looking to trade, you're either staying away from the US dollar, so you're probably looking at yen pairs, such as the heavily traded euro yen. There might be something there to look at. Otherwise, you're looking at the majors and staying in those shorter time frames for the opportunity to sort of get short. That said, I think probably not the best idea to be taking on a trade on the US dollar right now. I'm waiting for the FOMC announcement, because the volatility certainly will spike and you'll get bars like this, even on a 5-minute. So bars like that will happen around the FOMC, so it can sort of damage your trade pretty quickly. Okay, we'll see you tomorrow, and we'll discuss the outcome of the US Fed, and looking forward to the other central bank announcements. Thanks, guys.